Welcome back. This has been a really treacherous month for a lot of traders and investors, and especially for the perma buy the dip buyers. It's just been that kind of a month where, in a bear market, no price is too low. In a bull market, no price is too high. Right, Gurmeet? Gurmeet Chadha is in fact joining us. He is the co-founder and CEO of Complete Circle Consultants. Gurmeet, so how to approach this kind of a market especially for portfolio investors?
So Anuj, I think it's been a tough one, right? And I was and every 2-3 years market does this to you. It's just that we get too engrossed with the current correction. It happened in 2020 in COVID. It happened in 2018 in small cap. It happened during Demon. It happened during Fed taper. It happened in 2008. You can go on till tech bubble. 2004 Vajpayee government falling. So every 2-3 years market tends to do that. And but I agree. I think this time probably it's been a little more long drawn and it's grinding now towards the and especially the last leg of the correction is always painful. I personally think that market is trying to factor in all the negatives. Some of them are in the price. So what you should do right now is, as I said last time, for some investors, if you don't do anything, that's also fine. Let things stabilize. And investors who have slightly better risk appetite, there are pockets where if you have dry powder, you can start looking into whether it is private sector banks, IT, for example. I think heavy correction both in large and mid cap space, and gradually do it and let things settle. So also the fixed income yields are becoming extremely attractive. And I made this point earlier that whenever the 10-year is been around 7.5 to 8%, the next 3 years, even in 3 years return in fixed income is also 8 to 9%, right? So have a more balanced approach right now. And I think that's as earlier corrections, this too shall pass.
Oh, this too shall pass. All right. I guess, retail investors only have to live with that theory, right? Gurmeet, good morning. I wanted your thoughts on Bata. How does one approach it now? The numbers were good, actually. It was a mild miss on revenues, nothing alarming. But this is still in a 7-8% growth is what they saw on the top line. Is this a stock that you buy on every dip?
Expensive, Sonia, as per me. I think obviously you have schools reopening that will reflect in the volumes. Even their in-store footfalls have gone up. The omni-channel mix has improved. The margins have become better, I think, which was one positive thing. But at these valuations, getting into consumer companies in a market like this where interest rates are high can be tricky. There are better consumption names where we have seen correction, where probably the demand would be more durable. I think those are better placed. So paying a reasonable price also equally important in phases like this.
Gurmeet, good morning. So give us your top 5 ideas, and you're only allowed one bank in that, not 3 banks. Yeah, go on.
So, Prashant, since we are building our portfolio also on the PMS side,
yes.
So I think as you rightly said, I think private sector bank, ICICI, I think comes there. Reliance, I think probably 50% EBIT now comes from Jio and retail. The energy portfolio is transforming. I think it's pretty similar to what they did with Jio. Did a lot of capex, and then the monetization started. I think something similar will happen with the energy portfolio now. Almost 11 acquisitions, more than 1 lakh crore already committed on the capex side, and stock has held up well. Even in these times, in fact, has done really well for that matter. I like some of the IT names despite a lot of downgrades coming. I think the right time to downgrade was 2-3 months back, and not when the prices are down 30%. So a combination of large and mid cap IT, maybe Infosys and Tech Mahindra, to be more conservative. Tech Mahindra now probably 18 times, and 50% revenue comes from the communication vertical. Also, I was looking at the the way large IT names like TCS acquired some clients. So if you see last quarter, for example, Q4, there were multiple deal wins in 100 million, 50 million, 20 million bucket, almost 65, 66 deal wins with TCV of $11 billion. So I think a lot of this slowdown on this, concerns on slowdown, some of it could also be offset because, the supply conditions are tight, labor conditions are tight. So there'll be more outsourcing also in inflationary environment, along with obviously currency giving up. So I think there'll be a bit of a trade-off at some point of time. And some of the, the CDMO and specialty chemical names, I think almost 30-40% correction. So something like maybe a Divi's Labs and PI fits in that list.
Okay, Gurmeet, you took Prashant very seriously. I mean, you're free to add as many banks as you want. it's our life, it's our job to make their life hard, right?
No. I mean, I think Gurmeet is happy to. So it's an interesting list. I mean, ICICI Bank, there is Reliance, there's Tech Mahindra. Well, Gurmeet managed to slip in 2 tech names, not 2 banks, but Tech Mahindra, TCS, Divi's, and PI Industries. PI is something which Gurmeet has been quite bullish on for quite a while. So
that's the hard part, right? Slipping tech names into your list after seeing a 30-40% fall.
It should be, ideally, it should be easy, right, Sonia? I mean, stocks have already, as Gurmeet said, stocks have already corrected quite a bit, unless, of course, your view is that they're going to completely get wiped out.
Yeah.
But which is not the case.
No,
I
no,
don't
no,
think,
absolutely. Prashant, I'll tell you one thing on IT, and I mean, I've been making this point for last 6 months before any of the downgrades. The IT bull market is over. I mean, let's be very clear about it. And what we get swayed by is the near-term performance. We're looking at this year's performance. The stocks are down 28%. And I just presented the stat at the start of the show that if you look at the valuation, the kind of run that you had seen. I mean, we're in an environment where look at what the Nasdaq stocks are doing. Big stocks are losing 100, 500, 600 billion dollars a day in terms of market cap. A lot of this was essentially small, easy liquidity, easy money chasing assets, and the one space where there was clearly visibility of earnings, there still is perhaps visibility of earnings, was the IT stocks. And that is where, the valuations of 14, 15, 16 times became 30, 35, 36 times as the new normal. I think what you've seen right now is a tip of the iceberg in terms of the IT stock correction. My sense, especially in the mid-cap IT, I think in the large-cap IT, I take your point, especially names like perhaps Tech Mahindra, HCL Tech, Infosys, they may have come to some kind of value zone. I think if you're looking at the mid-cap IT stocks, I think they're still in bubble territory. I mean, maybe the bubble has got deflated just a bit, but still a lot of way to go.
So just to add a little bit of nuance to what you said, maybe you said the bull market is over. I would paraphrase that to say maybe the crazy euphoria is over.
Yeah.
Maybe the bull market is not there anymore, but you're okay with, if you get 15, 16, 17% returns, right? I mean, that's
absolutely.
That's not bad at all by any yardstick. And the point about mid-cap IT, and I think I said this earlier, stocks which were trading at 100 times have now corrected to 60, 70 times, but they're still at 60, 70 times.
Exactly.
So there may be more to go, but then there are large cap names, as I think Gurmeet said, HCL Tech is now trades at
some large
Tech
cap
Mahindra.
names. Some large cap names are in fact back to below the median valuations.
Below 20 times earnings.
Absolutely.
Right?
So I think that is where perhaps you might want to look at, but mid cap, I think there's still perhaps a lot of froth which is still there.
If you say this is the tip of the iceberg, it's in terms of the fall, I don't know how big the iceberg is, right? I mean, Mindtree is down, 40% in the last 1 year. It's
and
pretty crazy.
what has it done in the last 3 years?
Yeah.
Just go and see. You'll be surprised. You're looking at the last 1 year. Just go and see what Mindtree has done in last 3 years. Look at what Coforge has done. We say Coforge is down 43%. Just look at what Coforge has done. And look at this is a 12-month performance for Mindtree. Despite this 40% fall, Mindtree is up what? Just let's get that chart back on, please.
20%.
Yeah, I mean
in the last 12 months.
After the fall. This is after the fall. And if you were to see the chart even slightly on the left, the rally started at 800 or 700. I think LTI, LTTS, all these names, KPIT, some of these stocks, they just ran up a lot. And of course, a lot of these are good companies, and a lot of these are coming out with good numbers as well. But a large part of this rally happened because of that that macro environment. The things changed on the day.
The easy money was over.
Exactly. The first rate hike was announced. You saw the end of the rally in the Nasdaq stocks and in the IT stocks.
And to think of it, it always became fashionable for people to say macro shacro does not matter.
Yeah.
It is all rubbish. We look at bottom up stocks, and the tap of liquidity turns, and suddenly the world looks very, very different.
Okay. Well, let's move on. I mean, we have a guest waiting by us. Let's go.